Hi everyone, this is Nadia here with the updated pro forma financial for the Bazaar Shop. I'm going to go ahead and start with just a brief overview. I did three different scenarios, and this is actually the third scenario, which includes both an online store and a mobile boutique. The other two scenarios just included the mobile boutique. So this is probably the most realistic scenario, the one that's going to give me the most irons in the fire and give me multiple streams of income. So I'm going to go ahead and just break it down for year one, two, and three for the third scenario. So, paid in capital by the financial institution would be $10,000, and then the capital that I could provide as the owner is $10,000, equaling about $20,000. So, here in the first unit over here, we're talking about the units that are sold monthly. The first 3 months, we're going to say nothing because we're preparing to actually have the grand open or to be open for business. I did break this down for mobile bus sales, and then even broke it down for thrift, vintage, handmade, and upcycled items, and then did online store sales and broke it down into those four components as well. And then I just proceeded to say how many of each category was sold on the mobile bus, and then how many, or the mobile boutique, and then how many were sold as far as the online store sales. I kind of have lower numbers because that would be something that's just starting off and that people may not be aware of right away. So I'm starting pretty low there, and then it'll gradually increase in year two and three. And the same with the mobile boutique. So I have that there, and these are the units that are sold monthly. Then I have the average price per unit. So here I break down um, what I plan on selling each item. So t-shirts, tops, dresses, skirts, etc. And then what I plan on selling them for. The price does increase slightly, and I just take an average of it, and then I start to do the complete average over here. And then the same here with other items, vintage, upcycled, and handmade. Um, I give a price of what I plan to sell over here, and then the average is up here for those items. So in this top section right here is all the thrifted items, and down here is the vintage, upcycled, and handmade, kind of bundled up in a group together. Um, then I come here and do the cost of my materials. So I do the thrift cost of my materials because I buy everything outright. This is kind of just, a rule of thumb of how much I would spend on each item. And then I average that out, and that would be my cost of materials. And it does increase because I increase the budget just a little slightly, or increase the budget slightly as each year goes on. But for the most part, it's just an average. And then I do the same thing with vintage, upcycled, and handmade. Then we have the units that are going to be purchased monthly or made, but purchased because I buy everything outright. So here I say how many items I'm going to purchase for thrift, how many items I'm going to purchase for vintage, handmade, and upcycled here. And then this is just a cumulative number of the units purchased, so we know what's coming into the boutique. And then the beginning balance of my inventory, and it just goes through of how much product is being added to the inventory, and then how much product is being purchased each month. So again, you have the zeros because we haven't quite opened for business yet in the first 3 months, but then as you can see, we start to have some numbers in there because it means we're open for business. So there we have fixed costs. So again, you see a couple of dashes for the first 3 months for event vendor fees. Again, not open for business yet. Then you have full-time staff and part-time staff. It would still kind of be, a fresh business for me, so I wouldn't necessarily take on any salary And because it's just a mobile boutique and an online store, I wouldn't have to hire staff as much as like maybe if I had a regular brick and mortar store where somebody has to be there all the time. There's a budget for marketing and advertising, how much we spend every month. Um, Website and social media, vehicle insurance, mobile boutique insurance, storage rent, rent for inventory, and then inventory in general. Um, and this is just inventory getting ready for the next month, what we need to spend, and then maintenance and gas. And then it just gives the total of our operating costs, and then our depreciable costs, and the tax rate, and the interest earned. So that's year one. Year two, it is the same thing, but again, we're just increasing in the numbers. Um, why you see month 13, 14, and 15 with no numbers here is because it is a seasonal business. So you see March through October. Um, so we don't have sales for the mobile bus there, but we do have sales for online because online will be 365, 24/7. So um, that's what you have there. And then we have the same thing. So my average price per unit for year two, the cost of materials, the units purchased. So because more people are buying, I'm increasing in how many units I'm purchasing to be able to sell. I want my inventory to be low towards the end of the year so I don't have as much uh, dead uh, inventory or inventory that hasn't sold. Then I have, again, my event fees. Still haven't hired staff for the second year. And the rest is about the same. Depreciable costs and tax rate and interest earned. And then scenario three, or not scenario three, but year three, it's the same thing, but an increase in online sales every month. Uh, my average price per unit is gradually increasing. Cost of materials, budget is a little higher. Then, of course, the amount that I'm purchasing to sell to my customers is increasing slightly. And then the same here with my fixed costs. Okay, moving on to sources and uses. This is just a breakdown of all 3 years. Talking about my month's ending cash balance, then my initial cash balance, talking about the interest and calculating that, and then also calculating how much I'm making from everything, so all of my product sales, calculating that month by month, then calculating the use of my cash, so how much I'm spending on materials is deducting that out, how much I'm spending on labor is deducting that out, and then also how much I'm spending on my operations, so it's deducting that out. And then you see the ending cash balance. Then it starts again at month 13, and it's the same thing. So how the next year starts off, and then it continues with product sales, um, the use of cash, my fixed costs for year two, and then my ending cash balance. And then here we have year three, starting off with month 25. Same thing, cash available for operations, my product sales, the uses of cash, and then my fixed costs, deducting that out, and then having the ending cash balance for year three. And for my income statement, um, it's just an overview. So it's showing my revenues, then it's showing, again, the cost of goods sold, my gross profit and my gross margin, my operating expenses, depreciation and amortization, other expenses, interest, and then profit before taxes. As you can see, is a synopsis of being in the red for year one, also for year two, and then it starts to be in the black at year three. And then my balance sheet, um, just a snapshot of my assets, liabilities, my equity, and just a summary of those things. Thank you so much for watching. Until next time.